This is going to be called What is Stock Liquidity and Stock Volatility? What's up, Tim Sykes, millionaire mentor and trader here, talking about liquidity, talking about volatility. These are key words. I know it's a lot of syllables. It scares people away. Most people just want hot picks, but you got to learn the intricacies of this market. You got to learn to put the proper emphasis on the proper syllable. Otherwise, you'll be confused and people will be confused around you, and I don't want that and you don't want that. If you click the link below, there's a free guide to learning penny stocks. And if you click another link below, it's a book written by one of my students that goes over all the basics and the terms and how I've now created over 20 plus millionaire students. The theories, the prices, the patterns, the setups, everything behind that. Anyways, liquidity. This is how much volume a stock trades. Is it trading 100,000 shares in a day? Is it trading 1 million shares in a day? Is it trading 100 million shares in a day? I personally don't like stocks that trade over 100 million shares in a day. They're very liquid, but when they're that liquid, you have all these little scalpers, all these little traders going in and out, and it creates a very choppy stock chart. If I do try to trade it, I usually get chopped out. Because it's so choppy and because I cut losses quickly, it's not worth my time to enter into such chop fests. Let's say, for example, a stock goes from 3 to 7 on the day and it trades 200 million shares. Bravo, congrats. By and large, if it trades that much and the stock goes up that much, it's going to be going up and down 10, 20, 30 cents at a time. I, being the conservative trader that I am, would get out with a 10 or 15 or 20 cent a share loss. Even if the ultimate trend over the course of the day is up, I would get scared out. I would get faked out. That's me when it's too liquid. Also, it can be too illiquid. I prefer stocks trading 1 million, 2 million, 5 million shares on the day, but if it only trades, let's say 50,000 or 10,000, I can't take that big of a position and I can't necessarily get in or out easily. If a stock trades, let's say 50,000 shares and the stock goes from 3 to 7, same price, but far less volume, the spread alone on such an illiquid stock will probably be, let's say the stock is trading in the 5s, it'll probably be 550 on the bid if you want to try to buy it, and like 573 on the ask if you try to sell it. That's a 23 cent a share difference. That's usually my risk level. So if I just try to buy it right at the ask at 573 and I wanted to sell it immediately at 550, I automatically lose 23 cents a share. Let's say I buy 1,000 shares, that's 230 bucks. That's pretty much what I lose when I'm wrong. But that's just to get in and out at the same price. If the stock actually dropped and I was wrong, I would buy it at 573 and I might have to get out at like 5. And I would lose 73 cents a share or $730. That's too much to risk for me. So I don't like too illiquid. I don't like overly liquid. I like it nice in the center. And you also have to look at your position size. I see a lot of people say, oh, Tim, like I can't trade a stock trading 500,000 shares on the day. And I'm like, why? You have like a $2,000 account. Take 100 shares. Practice. You know, it's also what is your account size and what is your goal? Sometimes I trade a stock that's trading 500,000 shares on the day, but the stock has gone from like 1 to 7 on the day. It's hugely volatile. The stock is going up. There's just not a lot of shares. MTRT is a good example. Pull up that chart. Pull up like a 10-day chart of MTRT. That's gone very nicely from like 3 to 8, back down to 5, and then it came back down, get back up to 8, all in a day, the 5 to 8 bounce. I probably should have dip bought it. That's a little too illiquid for me. But if I was a new trader and I had a smaller account, I could easily have bought 100 shares, 200 shares, 500 shares at 5 or 6 and flipped it same day at 7 or 8. That's a good profit. So liquidity is very much all over the place. You have to find what works best for you. You might talk to a millionaire trader and they're like, I love stocks trading over 100 million shares in the day. And they're scalping it back and forth 1,000 times. And they make 2,000 on the day. I know some scalpers like that. They make 20, 30, 50, $100 at a time. For me, that doesn't work. If I try scalping, I usually am wrong once and it wipes out my day's gains, week's gains, sometimes even a month's gains. I tried scalping many years ago. Not a fan. So you got to find what works for you in terms of liquidity. How do you know what works best for you? You test. You try out different trades. This is why none of my millionaire students made $1 million in their first year. They had to find what works best for them. Year 2, year 3, year 4. By year 5, year 6, you can really become a master if you are dedicated. That's not to say all years are created equal. 2022 has started out slower. 2021, 2020 were insane. We had bubble markets in 2020 and 2021. Fantastic for lots of trading opportunities, bad for your trading education. You learned to gamble. A lot of newbies did. All the newbies who gambled in 2020 and 2021, they're getting crushed in 2022. Several of the top Discord promoters of last year are now poor, and they're leaving Twitter and they're blaming other people when in fact they planted their own seeds to their own destruction, as I warned them, but they ignored me because they do too much cocaine and they're too egotistical. You have to choose your volatility too. I personally like trading big percent gainers. You'll hear me say this, trade big percent gainers. Some people are scared to trade a stock up 50, 100, 200% on the day. But for me, volatility is all about trading these big percent gainers because it's more predictable. When a stock is up 50 or 100% in the day, it might sound scary, but if the news is there and it's a hot market, it can go up 300%. Last year, it could go up 1,000% in a day. So far in 2022, it's been more timid. But CETI just a few days ago was up 1,000%. I underestimated that. I locked in 30, 40%. I didn't know that the stock would double from my entry. You have to find what works best for you. But I'm trying to show you predictable patterns that I've learned over 20 plus years. Whether I'm dip buying a morning panic, where there's ideally a lot of volatility, where the stock is down 20, 30%, or buying a morning spiker with news, where the stock is up 20, 30, 50, 70%. Can the news spike the stock higher? Is there enough volatility on the way up? Is there enough liquidity? Is there enough buying power to push the stock up even more? When I'm dip buying a morning panic, I'm not looking for a huge amount of sellers. Sometimes the best morning panics to dip buy are very illiquid, and it's just dropping 20, 30, 40% in a few minutes because stop losses are going off and people haven't recognized the good deal. Sometimes I might dip buy a stock that's only traded 100,000 shares and it's down 40% because there aren't a lot of buyers for whatever reason, and it's just a few sellers that tripped all of these stop losses. That's basically what happened on MTRT the other day. I think it only traded like 60 or 70,000 shares when it dropped from 8 to 5 in the morning. And then by day's end, it bounced back to 8. Very low volume, but there was that dip buy opportunity. So you can't just say, I always want to trade this range. I always want to trade, with liquidity. You got to judge every play a little differently. That's what studying is about. This is why I teach. This is why I mentor. It's not an exact science. You can't bring up hypotheticals like always dip buy a stock down 30%. Why is it down 30%? Did the FBI just raid them? Is the industry down? Are they a crypto play and crypto's down 10%? Or is crypto going to get regulated by the US government? Is the overall NASDAQ down 5%? There's a lot of moving pieces, and you got to try to think about how these moving pieces interact. That's what my whole Sykes sliding scale is about, if you've seen my trader checklist guide. I'm here to teach you, but you got to learn the basics and you got to make this work for you. Leave a comment below. Tell me what kind of volatility, what kind of liquidity you like. Let's see if you've figured out what works best for you. Or you could just say, I haven't made that many trades yet. Let's see where you are in your journey. I'm curious.